one of the first and most easiest things to understand is like liquidity begets liquidity, and a trading venue that gets more liquidity should have lock-in because it's like non-forkable state. And like if the liquidity is there, like more liquidity is going to come. And the PerpDEX space, like the exact opposite has happened. There's been increasing fragmentation over time. The capital in that space is very happy to chase the next airdrop, I think, and chase the newest thing.
Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed. What's up, guys? Welcome back to another episode of 0x Research. Today's a very, very special day. Michael Ippolito, co-founder of Blockworks and host of Bell Curve, the second best podcast on our network, is joining us. Thanks for joining us, Michael.
No, Baca, you got to set the expectations much lower. You got to be like, oh, we brought up the B tier for this one. Yeah, I couldn't get anyone else to join the show. That's set the bar low, man, so I can hop over it.
Michael. I'm also joined by regulars and not as special people, Danny and Ryan, who will attempt to keep up with Mippo, who, like I mentioned, is very good, and we should make sure to put some pressure on him. So
lower the bar.
Very true.
I'm just excited to be here. I'm going to try to keep up with y'all.
Fantastic. So I wrote up some topics. Today's episode is going to be kind of special. I want to hear Mippo's opinions on a lot of stuff. As well as I want to kind of stoke the fire with Ryan and Drift. So I think we're going to start off with Drift. And Ryan recently wrote a report on it. And obviously Kyle Thamani wrote a 50-page report on it. Ryan, do you want to run through why you think Drift is a winner over another order book or another perpetuals DEX?
Yeah, so just so for some context, we saw the price of Drift fall to like 30 or so cents, thought it made sense from a valuation perspective, and began digging and potentially writing a report or recommendation for the Drift token. We released our report on September 5th. The Multicoin team released a report some days later, though they had been early stage investors in Drift as well. Basically saying, like both reports saying more or less directionally the same thing, that, you know, the opportunity for Drift is quite large relative to its pricing in the market today. I think there are like kind of three main reasons of why we like Drift as like a strong risk reward. Not that like I'm not saying I think it will win or it will be the like the Multicoin report frame says like they think it's likely that it will be like the Binance of DeFi. I think that that's very TBD. I didn't make that claim. But there's like three things. So like one, I think is just Solana beta. I think that the market is still underestimating what FireDancer can do to that network. If FireDancer achieves maybe 1/10 of the scale that it's promising, you're just going to have way more throughput there. And that could drive significant fee generating opportunities for the DEXs there that are, you know, basically technically capacity constrained today. So just simply making the pipes bigger will allow more fee generating opportunity for applications like Drift. Drift is interesting in the second reason is that it's interesting in the context of that increased scale because it's the only cross collateral PerpDEX on Solana today, and building one of those systems is incredibly challenging. So if you get FireDancer scale on Solana, I think the current behavior of current users is going to change, and it's going to bring on new, more sophisticated users. And those new, more sophisticated users will want cross collateral as opposed to isolated margin when they're managing risk in these systems. I think the third reason why we like Drift is that there are Drift has an inherent advantage against other PerpDEXs because it sits at the L1. Why is that? The Multicoin report they pointed out something that's super important, but I think a little bit more obvious in that, like, they don't have to manage their own infrastructure. The team can focus on building the product, and I do think that's important. I think the more important point is that Drift has a more, because it sits on the L1, has a more clear path to achieving DeFi super app status. So offering complementary and adjacent products, cross-selling their users on different products because they sit where spot assets sit. So if you think about the basis trade, for example, you can do a basis trade in its entirety on Drift today. You can lever long perps, you can short the spot, and you can manage all that within one cross-collateral system, and that's pretty important. Drift can also incorporate various spot asset products, so borrow lend, spot trading, payments, things like that. That's much harder to do when you sit on your own island. So because competitors typically sit on their own island, they're inherently capped, or it's much more challenging that path forward to cross-sell products. So I think like the upside for Drift, given those dynamics, is there. We don't even, like, we mentioned bet in the report, which we think is super interesting, but since we're focused on like PerpDEXs right now, like we'll keep it at that, and I'll pause there.
I got a question for you, Ryan. Do you have or I guess for the whole group, do you guys have a sense of a very strong opinion on when you're looking at something like a DEX, what part of the infrastructure should basically be on chain and decentralized versus what's okay to be centralized? I feel like that's one of the levers that a bunch of different DEXs are playing with. And one maybe interesting example to look at would be DYDX. They're originally built on Starknet, and then they migrated over to their own full stack app chain in Cosmos. And a huge fan of DYDX. I love the vision of Antonio, very bold. He's been very product focused for a long time, but there's also a sequencing challenge. Like, they've had a lot of challenges, since migrating to Cosmos. And I think maintaining a decentralized order book is trickier. Like, that was a huge thing for Antonio. I remember him saying this was just not possible to do on an L2 in the current state. He found that very important to the ultimate vision of what a DEX was. But now I feel like they're figuring out that that's much more challenging. And I think it's interesting to ask the question, what part of the infrastructure actually needs to be decentralized, on chain, managed by a quorum versus what's okay to be centralized. Do you guys have strong opinions there?
I want everything on chain that you can, but like Antonio said, you just can't do efficient matching on chain. Like, you can't run an efficient matching engine on chain, which is why I assume they had to move it off chain. I mean, we have a few teams now with I can't bring up Hyperliquid again, like, with a straight face, because the past like month, every episode I've been bringing up Hyperliquid, but like, that's their whole thing, they're trying to do everything on chain. On the other hand, they are like, it's like free validators co-located, kind of a black box in that end. Is like, it's essentially what Mega ETH is doing, where it's like hyper optimized, but you are giving up on decentralization. They're claiming that they're going to decentralize eventually, but like, if you can just you have to have a trade-off. You have to make something at some point a bit centralized, because or else you just can't run everything on chain. It doesn't make any sense.
So I have thoughts, I guess, about I'm less in the weeds on Drift specifically, but I have thoughts about the just PerpDEXs as a category in general. And I think it's an interesting question to ask whether or not Drift might be beta to Solana. And I think there are some interesting parallels from the 2021-2022 cycle to look at. But perps are kind of interesting because they're kind of a classic, I think, value trap in a sense. Like, usually when sentiment gets bad and people start getting discouraged, everyone ends up looking back at like perps or anything that's generating revenue and being like, well, at least this thing's making money, And this was the, I don't know if you guys remember, I don't remember when the heyday was of this, but this was kind of like GMX and Rollbit. And it was like, well, Rollbit's producing all these fees and they're buying back their token. And just look at what Rollbit's done. And now everyone's confused. Like, why isn't that working anymore? It's that the narrative rolled off, and buybacks just don't work in crypto. It's not a value redistribution mechanism in crypto that works today, because these markets just aren't efficient. And the other thing about perps as a category, it's just very dispersed. There are so many different perp DEXs. Like, how do you pick the best one? I'm not really sure. I think that generally, because we don't have very solid frameworks for how to value these things, and I don't think that these tokens trade on cash flows or anything else rational, at this standpoint. You can just look at it as a game of fragmentation. So any category that has a ton of different coins that you can bet on is just tough. It's just tough. But I do also think I would be in the camp that one of the interesting things about Solana that has intrigued me a little bit is there aren't that many coins on Solana. Like for the kind of like the ecosystem of this cycle, everyone thinks it's going to be the next ETH. There haven't really been that many new entrepreneurs or apps building on it, and there really aren't that many options that you can buy. So I don't know. I really like when it comes to not financial advice, but I like the Solana beta story. I think that's going to work for some period of time. Like Jito is probably a decent bet. Disclosure, small bag holder of Jito, but I think, but perps as a category I found kind of challenged, just because there are so many of them and it's hard to differentiate.
Yeah, I agree with you there. I think that, look, as someone who got into this ecosystem like pretty late 2019, 2020, one of the first things that you learn is like, one of the first and most easiest things to understand is like liquidity begets liquidity, and a trading venue that gets more liquidity should have lock-in because it's like non-forkable state. And like if the liquidity is there, like more liquidity is going to come. And the PerpDEX space, like the exact opposite has happened. There's been increasing fragmentation over time. Capital has the capital in that space is very happy to chase the next airdrop, I think, and chase the newest thing. So like liquidity begets liquidity. Like I do believe that network effect exists, but I do believe that there are counteracting forces such as like the grants dynamic, like the incentivization program dynamic, like the airdrop dynamic, like those really overpower that network effect they have historically. Perhaps that changes if FireDancer can do what it says it can do, because then you have a meaningfully differentiated tech stack versus what's on the market today. Combined with that cross collateral, the ability to do cross collateral there, I think is potentially powerful. But no, I totally agree. PerpDEXs historically have been really challenging to do. I think it could have been DYDX, and I actually think the overarching problem there was not like switching the tech stack a few times and potentially switching it again. But there was the issue where the DYDX equity was making money at the expense of the DYDX token holders, right? I think that was a bump in the road that really changed the path for that project. I'm pretty cognizant of that when I look at these systems. I think it's probably one of the most underrated risks in crypto today, as far as like if you want to own a token. I didn't find a lot of that in the PerpDEX space today where I was poking around. So I think we've learned, and hopefully you can see someone get some sustainable market share as a result.
Yeah, I want to agree with you, Mippo, on your point around. I think it's kind of the point that like price sort of drives narrative. Like we get to these scenarios like with GMX back in 2023. People go when the market is maybe struggling, they look for these these businesses that are cash flow generating. They look at price to fees, they look at revenues, and they get really excited about that because obviously all there may be more speculative bets are in the dumpster during those times. And then when we see that trend reverse, it's like the exact opposite. It's like, well, this valuation actually really isn't that good, and everything else is going up multiples while I'm sitting here with this 20% gain on whatever. And they flip flop, and then we see it again. I think recently there's been eyes on people like teams like Aave, tokens like Aave, Maker, again because Bitcoin has been sideways down, and people are kind of getting into that same feeling of like price driving narrative, and they're like, well, all these like more questionable longer term speculative future bets are struggling again, getting hit hard, and they're going back and going, wow, look at all these businesses that generate revenue. And then if price starts to go up again, it's like what's the reaction going to be? So I totally agree on that point.
But this happens, yeah, like that GMX thing I remember. But we also had 2022, 2023, everybody tried to copy GMX, and we had like maybe 30 forks across 15 chains. It was kind of insane that happened.
That's the fragmentation issue that happens in crypto, because the marginal cost of spinning up something new. Here are like 4 different categories that this has happened. L2s. So the first couple L2s like Optimism and Arbitrum, you actually had a pretty long runway of spinning up an L2 at that point in time was super complicated. But now you got these RAS platforms like Conduit that makes it like the four of us could spin up an L2 on this podcast in 10 minutes. That makes it very challenging. Right? That's super easy. That's basically bringing up on a whole bunch of new supply online. Meme coins, same thing, right? It's as soon as Pump.Fun happened and they were launching thousands of new meme coins a day, eventually the market was going to collapse under the weight of that supply. Same thing with PerpDEXs, and then same thing with prediction markets. I saw the guys from Alliance tweeting the other day that there are 30 new prediction markets coming online. Like, I mean, yeah, I don't know how you guys feel about prediction markets post November 5th, but yeah, I mean that's going to be challenging to sustain any token values just when you have that many different options.
No, I completely agree, and it's like you said, it's an issue that crypto has, but it's also an issue that in general, like a lot of other sectors have. Like with gaming, this is something that I talked about on here as well. But with like once you launch one successful game, like if you go on the App Store and you search for like Subway Surfers, there will be like 55 derivatives of it, and it's just the way that I think in general the world works. This is like me coping about crypto constantly copying each other. I'm trying to be more positive on the podcast, but I agree with you. Like post, I guess November 5th, like election season, I don't see any of those prediction markets surviving. Poly market, I think, has to survive. If you raise $70 million, you have to survive at least one election cycle. You can't just die out. They'll be fine. I think eventually they'll like sports betting. I'm not sure if that's big with prediction markets. We don't really have it over here, but I assume you guys do prediction markets for sports betting.
Well, I was just going to say there's a Blockworks Research dashboard on Poly Market. It's got the best data in the business on Poly Market. But yeah, if you want to rip that up, Buck, I was looking at it the other day, and it actually looks like, here's the thing that you can't really tell is it actually looks, if you look at the percentage of different trades getting made, it actually looks a little bit more distributed than you might think. Like there's a higher percentage of people that are betting on sports on Poly Market than you might otherwise imagine. There are more categories, but the actual amount that's getting bet is still vast majority politics related.
Yeah.
And then the other thing that you can't really tell is how many people are coming to the site to bet on the election and then end up betting on something else. So even though the metrics today are showing that people are betting on sports or something else, if that election were to go away, that's like the marketing for Poly Market goes away for the rest of that stuff. And then they're just competing with FanDuel or whatever, and they're just getting smoked.
I think the sports bet angle is going to be a lot harder than the election angle. To your point, like the competition in FanDuel and DraftKings and like pick your favorite, like those guys are making millions and billions, and they're spending, and they have official partnerships with like the NFL, with the biggest, sports associations of today. So that's a much taller hurdle than like this election market area that, there are some apps that are in that space, but it's far smaller, and it's not really like captured by giants today.
I mean, if you don't have a phone app, I don't think you can compete with sports betting as well. Like even if you have that progressive web app thing, it's just not good enough. People want to just download the app and bet through there while having beers with their friends. They don't want to like be on the computer saying, "Hey, I think the Jets are gonna win" or something. That's the only football team I know.
Yeah, that's a great point. And to kind of circle this back to Drift and what they're trying to do with the betting market product that they have. Like I think it really has to be differentiated. Like you guys said, you're not going to do it in sports. You don't even have a mobile app. The election stuff is going to run over. It's very seasonal. Drift's bet platform plus Solana's Blink's distribution. Like I think that there's a non-zero chance of virality there within the crypto community. So, what's super common in crypto? It's like arguing on Twitter. Like that is the PMF today. And like in a highly financialized space, like what better experience is there than being able to read a Twitter argument thread for thread, and at the end of the thread, there's a Solana Blink that has you bet on some like real world outcome of like what settles that argument. There are a ton of like internet subcultures that like operate on the same dynamic of just like talking shop and like making predictions about the future of their industry or of like the the culture that they're all a part of, right? I think that you have an installed base in crypto of perhaps a few 100,000 people who like to bet money and who are very ideologically driven on a lot of these issues. Perhaps we settle some of those debates in real time, like on the Drift platform, in via blinks on Twitter. Like that's not an unreasonable outcome for me, and it's differentiated, right? There's no competitors there yet. You have competitors in sports betting, you have competitors in election betting. Um, so this is potentially like the bet platform there is a pretty interesting response to like the seasonality of and the intense competition that crypto is going to see in other betting markets.
It's not clear to me that like Drift will necessarily capture this, but I do like the point around having the potential to go after this angle. Like we're seeing some new apps around like betting on live streams, like just permissionlessly creating bets related to active live streams, and then users taking one side or the other of that trade. I think the virality in that like can come from, like you're saying, with blinks and other technology that will tap directly into these social feeds of today. Like if there were bets on how Mr. Beast, like what his next video is going to look like, and people could take one side or the other, like he's got millions in reach, and to have people throw $5 or $10 on that, like I think that's maybe the larger virality audience size we're looking for, versus like CT arguing over like if Kalsamani won an argument or not. But I think that kind of tooling is the way that you get there, right? Like directly getting integrated into the existing feeds, existing socials of today, rather than like trying to get these people off of TikTok, because they love being on TikTok. They love being on YouTube, etc.
You guys checked in on Farcaster frames recently? Does anyone use Farcaster on this podcast?
I still check every once in a while. I go on Farcaster. It's died out, and I think the nail in the coffin recently has been that Vitalik has started tweeting again after getting stressed out that ETH is going down. So he's left Farcaster and come back to the regular world. I think like I liked Farcaster. Frames were really good, but blinks are like one is like Farcaster native, and the other is you can do it wherever you want. And I agree with Danny is that people don't want to go on Farcaster. They want to like scroll through TikTok and chuck a tenner thanks to Solana, if that's a possibility. I don't know if it is. Like realistically, I don't know how long that would take to be an actual experience, but feels like people want that.
Yeah, I think that just the gap to get users to Farcaster versus like everyone's already on CT, they're already using, they're watching stuff on YouTube, they're listening wherever they're listening today, and it's just, I don't know that the Farcaster experience is like strong enough from a product standpoint to get people to move over in mass. And like the CT community being what it is like incredibly niche. It's hard to see that generating like the network effect to get maybe other creators outside of that space to move there.
Mippa, have you been on Farcaster recently?
I haven't. No, I haven't. No? But no, I haven't. But I think there's a tension in between blinks and Farcaster frames and the goal of these social media platforms, which is creating a cohesive editorial experience. Most people wouldn't use that framing, but if you think about someone like the New York Times or the Wall Street Journal, which is sort of the legacy model of this, there is an enormous amount of agonizing over the front page and what goes into the front page and what stories do you see and what is the format, and literally the font of these publications changes every couple of years. And even though it's a little bit different, it's the same process on everything from Google to Twitter to whatever social network. And I think one of the tensions of frames, something like Farcaster, is when you allow more expressivity and creativity on whatever you're embedding into that platform, it actually creates a lack of cohesion. And actually what it's kind of degenerated to a little bit, I had a buddy ping me this the other day, is that it's kind of just degenerated into people pushing and selling things, which is originally why Facebook made that much more difficult to do. And so I think that's one of the challenges. That's why Blockworks was sort of interested in frames, like as the, looking at this through the business lens of Blockworks, like, hey, you can link out, and so suddenly the initial ideas that we had, like, hey, this is why this might be useful, is like, hey, we can sell tickets easier here. And that's great for Blockworks, the business, but that's not great for you, the consumer and the user of these social platforms. And so it feels like this was the first iteration of this, but that's a tension I see in between, with this whole idea. I don't know how it gets solved. But
I think it's a great point. I think like we're seeing a great example in maybe hitting both sides of that without squeezing the users too much is like TikTok has been incredibly successful with TikTok Shop.
yeah,
I don't know why that's the case, but it's like going back to the days of like QVC, like sales TV, where there are just some people who are willing to watch like a live stream of a creator that's just literally pushing products to them.
yeah.
And I don't know if they just have the perfect algorithm. They like know the people that want that and don't, and maybe that's all it takes, and they can differentiate that pretty easily. But um, I do like that, like a frames, like a blinks can enable that potentially across platforms, and bring maybe that TikTok shop kind of experience, sort of generally across the board. But you do make a great point. Like it is finding the right kind of sauce to not feel like every time you scroll through an app, it's just like ad.
That's been my experience on all social media recently. Ad is it. And I wonder, like, that shopping thing on TikTok, I wonder if it's obviously it'll be more successful in Asia. And I wonder if I know, Ryan, you have some thoughts on the way that we use social media and the internet over here versus they use it in the East. But I wonder if it's just like the phone experience. That's why TikTok's just been more successful, like the QVC style of being able to just scroll, and they're just way more comfortable with it over there. Like if I see an ad over here, I get like viscerally upset. I'm like, I do not want to watch this. Versus like if it's just become a regular part of life, like we just expect something else over here versus over there, how the internet has shaped culturally.
What's one sort of interesting thing in podcasts is if you look at the way that podcasts monetize, there's two models. You can do subscription podcasts, or you can do advertising driven podcasts. And I haven't checked this in a couple of years, so I don't know if this has stayed true. But in the US versus China, the way that podcasts get monetized are inverses of each other. So there's a really low percentage of podcasts that charge subscription in the US, and most of them are just monetized via ads. But in China, it's the exact opposite, and most of them are subscription podcasts, and there's almost no advertising at all. And so some of this stuff is just weird, like idiosyncratic, almost like path dependent reasons for how markets evolve. There's not some first principles logic to it. It's just this is how it sort of played out. It could go.
Something I would not
either
have
way.
expected is the US having less subs based.
It's interesting because if you look at like I just know that like if you look at Patreon and the podcasts that like do well with their free version, I think what often happens is they have kind of the free front facing podcast experience that you can watch on YouTube, Spotify, etc. And then it's like the extra bonus content is behind the paywall. And I don't know if that just speaks more to like the American mind. It's like, oh, now that I've watched this, I like it enough to pay the money for like more stuff because I love it. And maybe in Asia, it's just, I don't know what that funnel looks like where people are just convinced that they're like willing to pay for something straight up. But that definitely feels a bit more like you kind of have to sell the product a little bit, and then people are willing to actually like bite.
Did you guys see, not to go totally off topic here, but did you see those OnlyFans numbers that ended up getting released this week? That got.
We talked about it last week.
What an incredible business they've built. It's unbelievable.
And they return a lot of the money.
They do. 5.3, I think, went to their creators, which is incredible. And they still ended up with 500 million of, net profit, which is insane.
What it evolved into is like, do we really need crypto to empower creators? Because these guys are returning 80%. Like that's more than enough. I don't want to be negative about crypto. I love cryptocurrencies, the tokens, everything. But like, if they're already returning 80%, then I don't know if we really need it. What do you think?
I don't know. I agree with you. It feels like a little bit of a narrative violation because the porn industry is also one of these unbanked. Actually, there was a guy I think he was an OG Ethereum guy, but his name is Amin Soleimani or something like that. And he built something called Spank Chain. Yeah, which was explicitly for, you know, adult industry performers that couldn't get banking services. And everyone kind of laughed at it. It was the 2018 cycle come rocket sort of, but it was very legit. This guy's a really great developer, and I think he's still very active in crypto community. So sorry, I mean, if you're listening to this, I don't mean to marginalize you. I just haven't been following what's going on with you recently. But yeah, it feels like it should be a thing that works, but for whatever reason, OnlyFans has been able to get around it. Maybe it's less on the creator side, but the thing that OnlyFans hasn't had access to is capital markets, in a sense. Like it's been very challenging for them to get access to like VC money and things like that. And frankly, it doesn't look like they needed it almost at all. But maybe I think the thing that crypto is really useful is just creating markets and capital formation around areas where broader capital markets are a little bit squeamish and can't necessarily see the future on, or might have these weird bureaucratic hangups around. And so maybe it's less on the creator side, it's more on the capital side in this particular use case. But it's hard to say OnlyFans hasn't been successful, and they're putting up the numbers that they are. So I don't know.
Hey guys, Permissionless, the event for crypto natives, is heading west to Salt Lake City, and we're bringing the biggest names in crypto together for an incredible can't-miss event. Join me and the rest of Blockworks on October 9th to hear from more than 200 industry titans, including Nick White from Celestia, Shriram from Eigenlayer, and Keone from Monad. The conversations at Permissionless will be covering the hottest themes in crypto, including modularity, restaking, the Bitcoin and Solana ecosystems, AI and crypto, rollups, L2s, institutional adoption, and of course the November election that will be right around the corner. We couldn't be more excited about this event, and it's happening in one of the most beautiful places in the US. Ticket prices will be increasing towards the end of June, so get your ticket today. Make sure to use the code so I get some credit and bragging rights from the rest of the team. Use 0x10 for 10% off on your ticket. One more thing. We're also hosting the Permissionless III Hackathon in collaboration with BiddleBox. The theme this year is a multi-chain future, to build a better cross-chain experience so I don't have to have a heart attack every time I bridge to a new chain. All hackathon participants will receive a free ticket to attend Permissionless. So if you're a developer, come join us in Salt Lake City, team up with fellow devs, and build the multi-chain future. Mippo, this is a question that I've had for a while for you, because you're very viscerally a bull online on Twitter. Like you're optimistic about the industry, but I want to understand, what do you not believe in? And you just mentioned like narrative violation with content creators. What else in crypto you're like, this actually sucks, guys, we should not be building this?
All right, I'm framing this in a positive way intentionally, but I think the way that we think about governance in DAOs today could deal with some major improvements. And I do view at a high level, one of the things that crypto does is it enables cooperation and coordination in a bunch of new senses. But I think that crypto defaults a little bit too much to, there's not enough nuance in terms of organizational psychology and structure. And I think that crypto has a bad habit of defaulting to committees and making decisions by committees, which isn't good. And I think that a strong principle that people should, that I really believe in, is what you're trying to do when you're organizing people is to attract talent and make the best decisions possible. And committees are oftentimes get in the way of that if they're not structured correctly and incentivized correctly. And I'm very optimistic about the future of DAOs, but I think we're still in the V1 version of that. And it leads to a whole bunch of very suboptimal outcomes. And so it's not, I'll caveat it by saying that I think I'm not a hater of DAOs in the long term, but I think we need to get way more nuanced in terms of how we think about how DAOs govern themselves. And it has to be more than just like one-to-one voting and a committee decision on everything. That's what I would say.
Do you have any good examples of what you think it should look like? I don't want to ask like, what do you think is a bad DAO? But what do you think is a good DAO? Or better?
So Vitalik wrote this blog post a little while ago about how he views DAOs versus corporations, corporate structures. And I can't remember the specifics, but there were differences in terms of convex versus concave decision making. And if you look at the U.S., and how government works and makes decisions in the U.S., it's very different than the decision making setup for a U.S. based company, right? And I think that, I guess the view that I would give you like a hierarchy of the closer that you are to the metal of like the L1 and like these kind of money like commodity like assets that L1 tokens are, the more you want a very decentralized, like I think the only probably true DAOs in practice today are Bitcoin, Ethereum, and Solana. It's L1s that I think actually operate like DAOs. The rest, and especially as you get further and further up the stack, like maybe L1s are here, and then there's L2s, and then there's sort of middleware, and then there's applications on top of that. I don't really see why any application should be governing themselves in a structure that isn't like a company in the US. I get why they're not doing it right now. It's probably just for regulatory arbitrage and people don't want to be labeled securities. But I mean, come on, these things are applications, they're companies. You're creating a product. And, I know we set out in crypto to say, hey, the money is broken, but what's not broken? The way that companies organize themselves in the United States. It's arguably too efficient. It's too good. So that should basically just stay the way that it is. And then the further you move down that stack, I think the more DAO-like and decentralized the governance process should ultimately be. So I'd be in the camp of not reinventing the wheel on anyone that's making a product and there's not a really strong rationale to be decentralized. And then I don't really know what the future of governance looks like for L1s. Right now it's kind of opaque the way that decisions get made. There are these processes, but they're not, it's unclear how decisions get made. And I think you probably have to put some amount of formal, much more transparent structures even in at the L1 layer. I would see that changing as we go forward from here.
For what it's worth, I like the way that L1s are run, just because it's like there's very clearly like the Ethereum Foundation, or like in Solana, it's like all the engineer, like that totally level of engineers, and they just run it, and I think that makes sense. I know eventually we want to make it a bit more equitable, but for now, like these are very early stage, still in my opinion, especially Solana. Maybe Ethereum's a bit more mature, but they have some issues. I feel like they should just like run it how they should run it, as opposed to like S-Swift style. Everybody gets to say, hey guys, maybe we gotta actually go with MCP. What do I know? Like, I don't want to. You shouldn't ask me, man. Resnick, you guys discuss it amongst yourself, not with me. With the business thing, this is another one of those scenarios where just because of regulation, we're not doing like max efficiency of what we should be doing. Like, there's so much stuff in crypto that's just like, if there was like a little bit of clarity, if just somebody would write a sentence on some official document that said, hey guys, you can do this, like crypto would improve 2 to 3x minimum. Not just market cap, but like enjoyment wise. I would just be so much happier dealing with some stuff as opposed to, like you said, things being run like with committees or one-to-one as opposed to like a business.
I do think it's ironic to say that we need to see more transparency in like DAO governance systems, when I think like the opinion from folks related to traditional governments is that we need to see more transparency, and yet we're dealing with like decentralized ledgers where you can go and look at all the transactions, and yet the governance systems are struggling to be as transparent. So I just thought that was a funny point, but I agree on like in this differentiation between like these layers and like applications, which are more like businesses. I mean, I think your point makes sense. And maybe just one other jab is that, crypto participants are finding out that it's difficult to build a government. It's like, obviously that's not going to be an easy thing to do, and make it efficient. Every culture and country around the world has struggled with that forever. So,
yeah. So what would maybe be a hot take is that everyone in crypto, especially the Bitcoiners, don't like the Federal Reserve, right? It's the evil empire, Jerome Powell's Darth Sidious, whatever. The Federal Reserve is 10 times more transparent than almost anything that exists in crypto today. Like so what does the Federal Reserve have? They have a dual mandate. They say, these are the two things that we care about. And by the way, when we meet, We have minutes, so you know what we're talking about. We, once a month, will get in front of a bunch of reporters and take questions. We're going to show you the data that we're looking at in order to make these decisions, and we're going to explain the framework with which we... Now, do they actually do that in practice? You know, is there stuff behind closed doors? Yeah, absolutely, because these are human beings. But that is far more transparent in terms of how the decision-making process ends up happening and the division of responsibilities than, you know, unless I'm missing something in crypto, like, tell me. But I mean, that's very clear and explicit decision-making and org structure. And I just don't really see a lot of examples of that in crypto.
Yeah, I think the unfortunate part is like the average maybe participant that's at that level today, like in the Bitcoin discussions, it's like they know what's going on. So they don't need the minutes. Like we're not at a point where like average Sally on the street is asking about the minutes from the Bitcoin chat from this month because they don't care. But it's not on the level of like the Federal Reserve today. So that's part of it. But obviously, like, you know, they should certainly be taking strides in that direction if the point is to get there. So I agree with you.
All right, I'm going to bring us back to one thing that I want to know about, which is how does an L1 win and how does an L2 win? Because I feel like I've wanted to bring this up since the very beginning, ever since Ryan said it makes sense for Drift to exist on its own, like not on its own chain. And I think that it makes sense for a PerpDEX to exist on its own chain. And then it ties into, do we need app chains? And then it ties into, do we need more L1s? Or do we have all that we need? Ryan, I think maybe we should start off with you. Last week you already gave a bit of an angry rant, but maybe this week you'll be a bit calmer and nicer about it.
Yeah, there's a lot of end state talk. I have end state talk fatigue. I remember in 2015 when the cloud was in its end state and like the future of AWS and Azure and GCP was margin compression. It's a very silly take in hindsight. 2018, right? The global smartphone cycle was over. Apple stock was taking it on the chin because smartphone sales had peaked and it was the end state of smartphones. I remember 2019 and 2020 when like AGI was never going to happen. Like maybe we get AI, but we certainly don't get AGI because these models are only good at one specific thing and not general things. So, you know, there's a lot of end state talk. And I think historically, if you look at technology markets, I don't think you ever get there. Maybe you get to this like 5-year period of like plateauing margins or like some relative stagnation, but like things change, especially in crypto when capital moves so quickly due to these like incentive mechanisms that we talked about a little bit earlier, airdrops, incentive programs, foundation grants. So yeah, I don't look. So then the question is like, how does an L1 or an L2 win? I think that I really only have hindsight over the next like 12 to 24 months. 24 is even probably a stretch. And I think as someone who's like looked at a lot of these L2s from like a valuation perspective, because a lot of them are starting to look attractive versus like historical valuations, it's going to be really hard for these upstart L1s and L2s to quote unquote win or to really carve a name for themselves in market share. I think I said a few weeks back, like you can't compete on liquidity. Ethereum has all of the liquidity. You can't compete on technology because like the biggest tech gap was like Solana versus Ethereum in like 23 to 2021. And all of those tech gaps have closed. We now have sub-cent transactions across the board, really fast block times. All the wallets are generally the same. It's all about like BD and go to market, right? Some chains are really focused on interesting incentives if you think of Blast, but like that's going to be really hard because Blast did have a really interesting incentive program and they got some traction and they lost it all. So look, I look at the big ecosystems, Solana, Arbitrum, Ethereum, Base, not in that order, obviously. I think it's going to be really, really hard to compete with them, L1 or L2. I think it really is a BD and go-to-market thing. and I have opinions on which foundations are doing the best. But yeah, I think that's really all you have at this point.
I think to add to like, we're seeing like a lot of the tech converge. At this point, if you're launching an L2, you're probably copy pasting the 50 other chains that exist. There's no differentiation. Um, to Ryan's point about like go to market and attracting users and chasing after that opportunity, it's like we need to see this translation of tech and capabilities into products that users want to use. It's not like, oh well, ZK will enable this thing in the future and that's so cool and I'm going to buy it at a $20 billion valuation. It's like ZK enables this, we built this app, this is how you use it, it's really great for users. Like, have the tech, create the product, get people to use it, like fantastic. And that's how you differentiate. If it's like we're the fifth ZK chain because ZK tech is going to do this thing, it's like do the thing. Nobody cares that you're going to do it when there's 4 others doing the same thing.
Think about the ZK tech like kind of framing too is like this is all open source stuff. If you have the magic ZK thing, your competitor who already has market share can just take your ZK thing. That's been true for a long time, but now that these like top 4-ish chains have like significant user bases, it matters much more today than it did when we had 1/10 of the users.
Yeah, agreed. And if you have the liquidity and like Arbitrum and Optimism, they make money. They'll just like they're hiring ZK Labs to actually do more work for them on top of, like you said, they can just take the ZK tech. Like you already have the liquidity, the users, the activity. The reason I asked about the L1, L2 is I want to know if the L1 trade is dead. And this is something that I don't think is dead, but it's going to tie very beautifully to another question that I wanted to ask, which is at what point do you care about fundamentals versus like speculative? Because I think the L1 trade will always be there because of speculative reasons. But I think like fundamentally, I agree with you in that these designs are all converging. They're like you said, it's liquidity versus the tech. And the tech is like, okay, Sui and Aptos are fantastic. DAG-based consensus, game-changing. Move language, very good, very secure. Doesn't matter that much, like, if no one's building on it. So at that point, I feel like it's, like, speculative versus fundamental. So I also want to kind of hear your thoughts on that. Is the L1 trade dead? If it's not dead, is it not dead because we're just gambling?
I would be pretty hardcore in the camp that the L1 trade is not dead. Personally, I think there are a couple. So first of all, Ryan, just to respond to some of your initial points, yeah, I think you have the exact right take on endgame fatigue. Like everyone talks about it. These podcasts don't sell themselves, so you gotta have something big idea that everyone can grasp onto right at the end of the day.
That's the PMF. That's the
right.
end. That's PMF.
There are a couple, topics that launched all podcasts. There's the modular versus monolithic. There's the end game debate. There's the LRL2s. These are great things that people like to know. I am less sure that I agree with you on the tech differentiation. I don't know. And I'm just gonna hold off and say I'm not actually 100% sure that we've solved that stuff. And even if you go back to March and April of this year, Solana was breaking underneath the amount of transactions that were getting introduced by Pump.fun, and that's not that many transactions in the grand scheme. I think there's plenty of room, right? Like scaling a blockchain is really a challenge of managing your supply and demand, like your block space supply and your ultimate demand of transactions. I think one of the mistakes that Ethereum has actually made from a path dependent standpoint is I've actually weirdly brought too much block space supply online. Like there's way too much cheap block space now on the Ethereum network. And they've reintroduced platform risk in L2s, which is the whole point. I could go on a monologue about that. But the demand wasn't there yet. And so they have L1s have this very tricky challenge of trying to scale the supply of block space to meet demand. But demand is so pro-cyclical and so difficult to manage that I'm not actually sure it's a manageable problem. And I think the point, honestly, Multicoin says this a lot. And I really agree with this point that we're so early in adoption in terms of regular, sticky, daily active users that when this cycle really comes back, this is anyone's game. It's just anyone's game. Yes, Ethereum and Solana have the advantage right now on the smart contract platform side, but some amount of like really sticky, really good strategy, in acquiring users. I agree with you on the point that like go to market and BD are going to be differentiators. And I don't really see a lot of that at the L1 layer. I think there's opportunity for an L1 which is really differentiated on that front to significantly win out. And the ultimate left curve, and then sorry, Buck, I didn't mean to cut you out there, but the ultimate left curve here is just that as soon as, just like every other category that ends up getting copied, L1s are the ultimate category that gets copied. And when Bitcoin and ETH and Solana start really ripping to the moon again, there are going to be these crazy rounds that come in. They already did for kind of like the monads and the bearer chains of the world. And maybe those are the new L1s. Maybe I'm not sure. But one of these new L1s that's going to get funded, that's going to do some cool new thing, they're going to drop their token and they're going to be able to bootstrap enough demand, and they'll be able to stick around and not fail when the water inevitably goes out again. And I think they'll have just like a shot at, there's my view has always been, I think there's going to be 5 or 6 of these things that end up really sticking around, 5 or 6 different ecosystems. But sorry, Bucka, what were you going to say?
I was going to say, because you brought up, you don't think that there's an L1 that has kind of won over. I feel like, what's one L1 that never, like we just brought up Ethereum and Solana. And we're like, oh, like these haven't won out. Tron is arguably the only one that has actually like significant PMF, to the point that it's exactly that user base that you're talking about, like that sticky. Obviously it also has its cycles, but I feel like it's much less than the other ones, like the cyclic, because everybody uses it all the time. It's low value usage payments. We like to call low value usage. I don't know why. I guess it's not as much fees like Per, but they make money on that chain. And that chart is one of the most beautiful charts that, like, I don't know if Justin Sun is personally drawing it, but like they've done a fantastic job over there. So I feel like it's one that we never really bring up, and we like to talk about Ethereum and Solana and L2s. But you can't really talk about Tron. It's not culturally acceptable. Which is also an interesting thing, but we won't dive into that today. But Ryan, what do you think about the L1 trade not being dead?
Yeah, I totally think that that's true to a degree. Like I do, like it's kind of contradictory of me, right? Like I'll often say like the space rounds to zero, right? Which that kind of implies like anyone can come along and win. And like, yeah, there is a non-zero chance that like if Facebook anoints Algorand as the NFT chain and like Jake Paul like is just like ripping it, selling NFTs to his folks, his fans, then like Algorand kind of, I mean, it becomes a big financial outcome for Algorand, getting wallets into a lot of hands. But I think I like look, if we all talk to founders, I put myself in the shoes of a founder who's thinking about deploying in the crypto space. You have like your crypto natives who like know they're going to go to where the liquidity is. Perhaps they're going to go to a lesser known chain because they're going to get some grant money. But by and large, like if you want people to buy your liquid token and increase your personal wealth, like you're going to go to a place where there's more liquidity. And again, the grant dynamic kind of messes with that, but I think that's like directionally the trend. And then I think of like, okay, you're a Web 2 founder. You've been in the game for a while. You just heard about this DPIN thing. Now, what chain do I want to deploy on? You want low fees, but then you also want people to be able to buy your token too, because again, that's like your personal wealth. That's the success of your project. If you talk to any of these DPIN projects, they'll say like, hey, the biggest pain in the ass is when our like customers come to us and they say like, why is your token going down? Because in the Web 2 world, if you're in business with a startup and you see their equity going down, you're like, what's wrong with your stock, right? Like you have that like kind of like supply chain risk when you deal with a startup. So like there's this I think there's this inherent tendency for people who issue assets to want to issue them on the chains with the liquidity. That's why Ethereum has done so well historically. It's a hard cycle to break. It's not happening in PerpDEXs because there's no asset issuance there. It is happening like on the general L1 where there is a lot of money that can like support these token valuations. I think when I think of all the important considerations that a founder has when entering in the crypto space, very few are more consequential than that one for the success of the project.
I totally agree with you on that, Ryan. But one thing that this might be a flaming hot take because it's been such an absolute dog shit. Like it's produced zero results. But these BD deals that you know get a little bit of like the Starbucks NFT thing or moving DMV. Well, all it takes is for one of those to hit. And here's a funny discrepancy. Like if you talk to a lot of people that are either working TradFi today about their sort of crypto exposure, I've had this happen many, many times to me where it's like, yeah, I own actually a good amount of crypto and I own like some Bitcoin and then I own some algo. And I think algo is going to the moon or some XRP. And why do they do that? Because these firms have spent an enormous amount of time and BD effort in the banking system. And all it takes is for one of those to hit. It hasn't worked so far, but I could totally empathize with I see the logic. And it makes sense to me that eventually one of those things could work. The other thing is just on the supply and demand thing. So, okay, let's just put ourselves like 6 months in the future. A more traditional bull market has resumed. Real demand is coming back to these chains, and Solana is just maxed out. Right? It's like this, like transactions are dropping left, right, and center, and new founder comes and says, "Hey, I would love to be building on Solana or Ethereum, but it looks like demand is maxed out here. So what are my other options?" Right? Like that dynamic, I think, is still going to be with us for multiple cycles, I would say, and it actually is, in my view, a real drawback to the integrated blockchain approach. Like that challenge of managing supply and demand is always going to be there, and yeah, I think it'll be challenging actually for Solana. It might actually be kind of a painful bull market for Solana in that instance because they have all their activity on one layer. It's going to be challenging for them because I think they're going to be maxing out a lot of their block space right at the time when they want to be attracting new apps. So I think it's actually going to be a struggle.
I mean, it has its advantages and its disadvantages as well.
I
Like
agree.
just being integrated, having as much. And this is my drift versus DYDX. I don't want to say really good. Drift versus DYDX thing is that when you're trading on a chain, like even if like Solana can handle the order book capabilities, but like you said, but when that time comes and sometimes things just aren't going through, Fire Dancer is supposed to be great. You don't know, like we just like you can assume it's going to be great, but it might not be great. Which is why I always think like PerpDEXs, I think lending AMMs you want to keep on the base chain because those require liquidity and interaction with other apps, and you want to keep it as safe as possible. But PerpDEXs, I think you want it off chain, like not on like the L1. I think you can have like an app chain, an L2 specifically for the PerpDEX because or else you're taking on too much risk. And Ryan, this is something that like I know you discuss in the report as well, which is you can't like fund managers don't want to take the risk of having downtime on a PerpDEX because they want to close their positions or they want to open new positions, and it's just something that you won't be able to do. So I agree with you, Mipo, is that if like Solana, the demand for the block space goes crazy, then like some of these apps just might not work and new apps might just not be able to come because they're like, we can't do anything. There's a million tokens launching on Pump.F on a day. There's literally nothing we can do.
Here's something I want to get your guys' perspective on. So I think that Ethereum. So a word that people used to throw around a lot more back in the day was platform risk. And when founders were getting it started, do I basically build on Ethereum or take a risk on some newer, less proven network? And it was actually a gigantic moat at one point in time for Ethereum because there were a bunch of new flashy L1s, some of which stuck around like Solana, some of which did not. Like I know Phantom is still kind of kicking, but less of the place that you would want to take a bet on. And so VCs, having been around and seen some cycles, were basically just said, I think, pretty good advice, which is don't risk it. Just why would you do that? Just build on Ethereum if you're going to have your product. Yeah, just why take that risk? It feels unnecessary. Now with the proliferation of L2s, you aren't supposed to build on the L1 anymore, right? It's too expensive. It's been the explicit part of the roadmap, which is new apps are supposed to launch on L2s. And these are now relatively new, unproven platforms. And one, it just kind of psychologically introduces a choice, which is actually not great from a founder perspective. So instead of just launching on ETH, now I gotta make a choice here, right? Do I bet on optimism? Do I bet on Arbitrum? Do I bet on whatever? And it reintroduces that choice, which adds friction. And then also, these are new, unproven platforms. Most of these rollups, I don't think there's any stage 2 rollups today, right? Am I right about that? I should know that off the top of my head. But there's actual platform risk that's got reintroduced to Ethereum, and then you trade that off with the dynamic of launching on Solana today, which is you just launch on main chain, which actually feels. So I think they've surrendered that moat a little bit. But on the other hand, I think they also, but I think in a sense, Ethereum is going to be better suited to scoop up some of this demand because Solana is probably going to spend this bull cycle maxing out their block space, which is going to lead to all of these UX challenges. Assuming that FireDancer doesn't magically solve everything, which I'm very bullish on FireDancer, but I think you have to be somewhat skeptical about it.
Yeah.
How do you guys agree with that framing, or what do you think about that?
That the framing is 100% correct. It's framing that, frankly, like I've heard that as early as 2021 Q1 about the ETH, the rollup centric roadmap for ETH. It's very obvious from first principles that that's the problem, right? Mm-hmm. There's obviously like liquidity fragmentation, asset issuers don't know what to issue their assets, but like there's platform risk. All the L2s have gone down, within the last 6 months or so, I'd say, or perhaps 8 months. So I think that that's definitely true. No argument there. To the capacity constrained point, my thinking around that is like, I've thought about this historically, and it's why I favor like quote unquote more centralized approaches in crypto. I'm not a decentralization maxi by any means. Think about what happens when an L1 reaches a capacity constrained point. Like theoretically, like their fee revenue and priority fee revenue is maxed out. So like everyone gets together and they say like, what do we do next? This happened to Ethereum, and they literally said, do everything everywhere else and we'll try to be money. Forget execution. You guys can do it over there. We'll try to be money. That's going to be our new go-to-market, which is a very low probability like go-to-market in my view. Like selling the product of money is extremely challenging if it's not USD denominated money. I think that because ETH holds that strong ideological bias towards decentralization, that path made sense. I favor L1s and platforms that are not as ideologically constrained by that need for maximum decentralization. So like what will happen to Solana if they've reached, or Sui or Aptos, if they've reached the maximum point of scaling? Well, my guess is those teams are just going to say increase the hardware requirements. I think that that's fine. Like that's totally cool. Like tell the community like this is going to be a 6 to 12 month thing, 3 to 12 month thing, whatever. But just like have beefier machines. Like we can do this. We can do increased transaction throughput with beefier networking and beefier CPUs or GPUs. So like when I'm thinking about like where to place bets, I'm pretty sure like this like ideological stubbornness of maintaining some like low hardware requirement at all costs, because you can't move in those scenarios when you reach that max throughput scenario that we're talking about. So like I think that if Solana is there for any significant period of time, I think they just handle it better from like a product perspective, like allowing users for their transactions to hit the chain instead of saying like, hey, go do this activity somewhere else. We don't care. I think that that's an important consideration when investing in these things.
I think they realize that now. Like Ethereum has, after Resnick's 4th podcast of him saying, hey guys, maybe we don't need to optimize for Raspberry Pis. We can just like run on a M2 MacBook Air or something. I think they finally realize if the requirement is 32 ETH, then maybe this guy can afford like a small MacBook Mini. In terms of the L2s, my horrible take, which I got yelled at in like the analyst chat, is that I don't think L2s are good at execution. And like we got into the semantics and we're like, oh, like technically they're good because they have higher TPS and because they have lower fees. I don't think it's worth it. I think like you're wasting so much capital that exists on the L1 and some of these L2, like I think you either want really beefy L2s, like let's not lie about it, centralize the sequencer, mega ETH style. I want a gorillion TPS, like whatever I can put on the chain, I want to put on the chain. Let's max it up. Or I want like the L1 where it's like I don't care if it's 15 TPS because what Arbitrum is 50 TPS, so huge difference. It doesn't matter. I'd rather have that liquidity, that like culture that ETH L1 has versus ETH L2, like the L2s have. Like you're actually launching products, you're getting silly on the chain. There's money flowing around. I like that a lot more than this like in between where it's like we have a bunch of mid L1s on stage one, not actually doing very well. Daniel Smith yelled at me for this. He said, "You're stupid," but it's still my opinion.
Why did he say that? Why did mean Daniel Smith say that? What?
I don't
Whoa,
know.
what?
I don't want
Did
to
you
tell
say-
on him on the podcast, but
Did you say you like getting silly on chain?
yeah, well, it's just what are you doing on Arbitrum L2 that you're like I can't remember. Base is different. I think they're doing something interesting there. But on Arbitrum Optimism, there's nothing to do anymore. Like on ETH L1, I'm still actually like if I'm on the if I'm on ETH mainnet, I'm still minting NFTs. I'm still trying out interesting stuff. And the apps that they launch, like the basic example is Vista, some random DEX that launched on the ETH L1 a few weeks back. Only went like 40, 50 mil market cap, but I haven't seen something like that where like everybody on my timeline is talking about it happen on Optimism ever. I've never seen it happen on Optimism. They like fully went for OP stack. We're just gonna do a bunch of random little L2s. On Arbitrum, when GMX was popular, it was happening. Everyone was building on GMX, but since then, that hasn't happened. There's nothing interesting going on. Yeah, it's the bear market, whatever, like there's less users, but on Solana it's happening. Like people are getting you can legally say people are getting silly on chain on Solana. You can't say that for Arbitrum L2. And on L1 people still get silly. And I know that's like not a right way to say, but at the end of the day, Brian, you said there's 100,000 users. I don't think that's true. I think there's like 10,000 users on chain, like of L1s and and Solana. And I think like these are very active users and rich users, and I think you want to milk them as much as you can. And how you can do that is by letting them get like do stupid stuff on chain, because that's when you earn most of your fees.
I support getting silly on chain. I think in the context of like Solana, the thing that I like the most and put a lot of stock in as far as like the team and the development teams that work on like the networking issues, etc., is like they're very much in like founder mode. They're not in ETH manager mode where they're sitting around like, oh, let's just push everything to L2s. Like we just won't fix anything. We'll just throw it all over there. And then you've got these other like I think even Base is a good example. Like Jesse Pollack, he has incredible targets for what he wants to see on Base, like gigagas or like multiple gigagas a second to be pumped through on Base. And I think Solana, it's been the same way. It's like you have or like basically taking down the network. It's just too many transactions. It's killing everything else. Like pump fun and meme coin activity, like basically keeping people out. Like they can't do anything because there's so many people trading meme coins on chain. Like it's causing issues. And the teams are like, well, we need to do a networking fix. We need to drop a patch like right now. We need to get working on it. We need to develop this and push it out right away. Regardless of the work on Fire Dancer, it's like, oh, there's an issue, let's fix it. And then people go and get silly again, and then they break something else and like, oh, we need to fix this thing. Like I think like that desire and focus on, there's an issue, let's get a patch out and fix it like right away and like just improve efficiency, capability, like throughput. That I think is something that I put a lot more stock in than like this sit around and decide like 10 years from now what does this thing need to look like. It's like just fix the problems you have right now and make it better.
Yeah, I agree with that as a philosophy as well. Here's one thing I've been thinking about. What do you guys think about the stack, like bundle of chains model that a bunch of L2s went down? One thing that I've been noticing now, speaking to a couple L2s, it's like, why did we do that? If the whole point of this, right, is that Ethereum is super decentralized. You can borrow some aspects of that, right? The settlement assurances that ETH network give you. And yeah, I'm kind of in the camp of crank that shit up to 11, centralize the sequencer, make it, and then if you have that as a perspective, you don't need all these different chains. Why do you need all these? Apps don't want their own chain. They just want some specific properties that separate chains give you. And so one thing I've been noticing talking to, I view this as like a bundled business model. The OP stack superchain is a bundle. Avalanche, they're not subnets anymore. They're L1s. It's a little bit of a bundle. It's, ZK Sync Era chains is a bundle. And they've got this business model where they're trying to use interop. It's all about monetizing interop. But that would be so much simpler if you just put everyone on one chain, right? Arbitrum 1 or ZK Era, right? That kind of makes more sense to me. And the business model of a bundle, it looks a little bit like a SaaS type thing. It's like, hey, all right, pay us your sort of monthly fee and we'll manage the back-end infrastructure for you on these chains. And maybe you'll pay us for interop or maybe not. But then on the, if you have one kind of chain that everyone's on, the business model is like, there's just transaction fees and congestion fees and priority order and all of this stuff, that just looks like a better business model to me. And I showed you guys before this, I did a podcast this week with Eugene, the Ellipsis Labs, Eugene and Frankie from Paradigm. And that's their perspective. And they've actually done a whole bunch of they're an SVM. They're using the SVM for their execution environment. They've modified little bits and pieces of it. They've enshrined an Oracle and they've made it like, this is the chain for DeFi. And instead of solving the noisy neighbor problem by moving everyone onto their own chain, they've just solved a lot of the issues that DeFi apps have, by battling it out for block space, and they put everyone on the same layer. And I kind of think that's like, seeing that is like, yeah, that does feel like the way, actually. What do you guys think about these stack kind of business models in general?
The stacks and bundles I absolutely hate. I think it's like a combination of, somebody else built it, so I need to offer something similar. This prevailing notion that app chains is exactly what people want. For some reason, everybody thinks like, we need to like accommodate for app chains, when it hasn't worked, except for like a few specific scenarios. And I think this is probably like not completely true, but this is my opinion. I think they need a way to make their native token popular. If you're an L2, you give it up for ETH, and you still want ARP to be used somehow. Like, I think with Avalanche, this is not very, very relevant because obviously they don't care about ETH, but they made subnet stake AVAX, Avalanche. Like, that's very clearly an attempt at making it maybe not money-like, but giving it more utility. And I think that's what a lot of these L2s are trying to do, is that because you're giving ETH all of the moneyness or capital-like properties, and you're giving it up on ARB or OP, and you want to give it like some form of utility. And I think the easiest way to do that is like through either making them stake ARB or OP, or just making them use it on their own chain, like keep putting liquidity on that chain through that. I don't think it makes sense as a business model. I agree with you. I think it makes more sense to just, why are we doing more modular stuff, like at another level? The whole point of the L2 was that we stopped. The moment that you do L3, I think it's like you need to look in the mirror and say, am I really doing this? Like, do I really need to do this?
The modular versus monolithic stuff is just an argument about timelines and path dependence, in my opinion. I would be in the long run, a proponent of modular design. And I think that the driving force behind that is, we haven't talked about ASS or app specific sequencing or whatever, but which should not be the acronym, but it seems like that's the acronym that we're landing on here. It's just the ability to own the fees that you generate. Like, I think of apps as order flow originators, and if you're originating your order flow, you are going to want control over the environment, the product environment, but you also want control over the economics that you're bringing to the table. And I think a lot of business models were built on this assumption that, hey, I'm just going to have all these order flow originators bring their order flow to me, and then I'm going to internalize it and keep a bunch of the value. And I don't think that's going to prove out over the long run, is what I sort of feel about
But
this.
the goal has been that you have to pay that money that you're giving up with your order flow to the base chain to benefit off of liquidity or not having to build. But you don't think that because we're getting all of these, I guess, like RAS products, or because it's becoming easier, you don't really need to pay for that security or that whatever, that building, that complexity anymore. We should just keep it.
Yeah.
Is the past argument. A2S is a good one. I saw A2S. But ASS is not great.
Yeah, I agree on the timeline perspective. Like, it feels like we're just not quite there yet. And I think the same goes with a lot of the modular focus. And like, I feel like maybe over indexing today is just people wanting to build things for something that they think is going to be like a dominating demand driver in the future, even when it isn't really a viable business model today. Like, I guess that's great from an idealistic standpoint, but if you're going to just lose money on it, I don't know that it makes sense. Um, I do feel like there's just some ways to go. Like we don't even have like app users still pay to interact with every app that they use. Like I don't know if there are very many examples of applications where like you log in and like the fees that a user would pay to like post the transaction are subsidized by that application, like that business for them, and they can like make posts or do whatever the app does, right? Like trade a meme coin. Like there's clearly some form of the business model in the future where, you go the way of like the traditional digital businesses where they're obfuscating all that stuff under the hood. They're paying for those server costs, and you don't have to worry about like these blockchain fees. And the value that they're generating from you, the user, is just so much higher. They're able to monetize you so effectively that it doesn't matter. But we get into all these arguments about like who's getting the fees, how they're getting the fees, what they're doing with them, when like we're just struggling to even like get the users to pay those in the first place.
For what it's worth, I think if we have to obfuscate stuff, I think um, if apps aren't paying rent to the base layer, they're gonna have to pay rent to somebody else. Like if you're an app chain, and I think this is probably why Uniswap launched their own wallet, and I think this is probably why we'll see a lot of other apps launch some form of front end for themselves that's on a phone, because or else you have to pay fees to Ravi to make it easier, or like to any other wallet provider. I don't think because or else I don't see how you're gonna get differentiated. I don't see how you're gonna get hosted. This is something I need to think about a bit more. I haven't looked at app specific sequencing enough, just because I think I got put off by the acronym for what it's worth. I thought it wasn't very serious, but it does sound relatively serious that I need to actually read up on it and think about it a bit. Unless we have any other topics that we're dying to discuss.
No, this was great, guys.
Mepo, thank you so much for coming on. Really appreciate you hopping on.
Thanks for having me, guys.
It was a great chat.
This was a great chat. Yeah, no, this is my never miss podcast, so I'm appreciate you guys making room for me.
Heck yeah. Comment of the year right there.